So if you're preparing for Caiib exam, then do watch this video till end, because in this particular video we are going to cover the very important topics, and further this video is going to be very important for you for the upcoming exam of Caiib. So whether you are going to prepare in Hindi mixed English language or you're preparing in English language, both the courses are available with the learning sessions over there, which you can basically be enrolling, signing up at our website, that is mentioned on the screen over there and also present in the description box below. Or you can simply scan the QR code over here and further can navigate to the website over there, or you can alternatively download our Android application, which is available in the name of IIBF Learning Center. And if you are iOS user, do download My Institute application and use the organization code GEGKT and start preparing for the same. We are having the full course for Caiib, in which we will be covering all the 5 papers of the Caiib, including the 5 elective subjects over there. And further, those are available in Hindi mixed English language. The electives are available only in bilingual language and not available in English language. But in English language, we are having the full-fledged 4 compulsory subjects, and we are covering the full course videos which are covered in chapter-wise manner. We are having the full course case study videos, and we are having the chapter-wise previous questions, mock test, mega mock test, each and everything is there. And also we are going to provide you with the complimentary access to the ePDF notes, so as that you can escalate your revision throughout the time when you will be preparing for the Caiib over there. So do enroll right now and start preparing for the same, and don't forget to watch this video till end. And further, if you like this video, do like this video and share this video among your friends and colleagues who have been preparing for Caiib. Let us take the case that bank ABC over here has lent the money to person A over here, and person A is repaying the installments in time. Person A is repaying the installments in time. In that particular case, we will say it is a standard loan. We will say it is a standard loan. Okay. But what if he just defaulted in the account? In that particular case, after some particular time, the account will be slipped to non-performing asset category. Right now, it is a performing asset, and it is said to be what? It is said to be standard asset. It is said to be standard asset. But if the irregularity is there and ultimately it turned out to be an NPA, that is non-performing asset, in that case there is a different categorization. What are those categories? Those are substandard assets. First of all, let us understand the categories of the NPA. It is related to the substandard assets. Further, we are having the doubtful assets. And further, the third one, it is related to the loss assets. It is related to the loss assets. Now, under the assets, under the different type of asset, under the different categories of assets, whether it is a standard asset, substandard asset, doubtful asset, or loss assets, banks are to make a provision. Banks are to make a provision against the outstanding balances. Against the outstanding balances, banks are to create a provision out of it. That is, it is related to, so as to maintain the solvency. So as to maintain the solvency of the bank, a provision is to be maintained. And further, this percentage is a different for the different type of assets and is prescribed by the IRAC and provisioning norms. Now, what are IRAC norms? This is related to IRAC norms. Now, what are IRAC norms? Kindly please anyone explain the term IRAC. What is IRAC? Kindly please let me know what is IRAC related term. What is IRAC term? It is related to the income recognition and asset classification norms. It is related to income recognition and asset classification norms, and further related to the provisioning norms. So IRAC and provisioning norms are there, and as per that, we will be categorizing our asset based upon the recovery, and further related to the category of the asset, the bank has to maintain the adequate provision. The bank has to maintain the adequate provision that it is related to. So IRAC is income recognition and asset classification. Okay. So let us take the case when a loan was sanctioned and for the amount was previously was deposited, but now it is not being deposited. That is, there is a default by the person. Person is a borrower to whom a term loan was sanctioned, and further his monthly installment was rupees 4,000. His monthly installment was rupees 4,000, and now he is not depositing the amount. Now he is not depositing the installment. In that particular case, the account is still standard, but it is showing the symptoms of irregularity. It is showing the symptoms of irregularity, and it will be categorized as a special mentioned account. It will be categorized as a special mentioned account. Now the special mentioned account is further classified into 4 categories. special mentioned account is classified into four categories. It is SMA 0, it is SMA 0, SMA 1, SMA 2. Okay, now SMA 0 category is related to when there is disclosure from 1 day to 30 days. When there is a irregularity from 1 day to 30 day, it is classified as SMA 1. When the irregularity is between 31 days to 60 days, it is SMA 1. And further, if the irregularity is between 61 to 90 days, in that particular case, it is SMA 2. Okay, so if the irregularity is there from 1 day to 30 days, in that case it is SMA 0. If the irregularity continues from 31 to 60th day, it is SMA 1. And if the irregularity continues from the 61st day to 90th day, it is SMA 2. It is SMA 2. And fourth category, it is related to the SMA NF, that is due to the non-financial reasons. That is due to the non-financial reasons. If due to the non-financial reasons, that is, let us take the case if the stock statements have not been submitted for that case, in that particular case it is related to non-financial reasons. Okay, for financial reasons we consider it to be of three types only, that is SMA 0, SMA 1 and SMA 2 only. Is that clear? Is that particular part clear over here? And after the period of 90 days, the loan account shall be transferred to the NPA category. It shall be transferred to the NPA category. And further, let me tell you, whensoever the loan account is transferred to the NPA category, it will be first of all transferred to what category? It will be transferred to the substandard category. It will be transferred to the substandard category, and further it will be there for an age of 12 months, that is from 0 to 12 months it will be there. And further, if the age exceeds this period, in that particular case it will be transferred to the doubtful category. Further, doubtful category is classified into D1, D2 and D3 category, that is doubtful 1, doubtful 2 and doubtful 3 category. Okay, so under the doubtful 1 category, the loan account remains there for the next 12 months. The loan account remains there for the next 12 months. And further, under the doubtful 2 category, it remains there for the next 24 months. Under the doubtful 2 category, it remains there for the next 24 months. And under that, after the 36 months period under D1 and D2, it will be continuing remaining over there. It will be continuing remaining over there after that particular period. Okay. And further, if due to any reasons, the bank has basically captured the loan account as a loss to the bank, and due to any reasons that the internal auditors or the RBI auditors want the loan to be mentioned into the bank books, and further do not written off the account, in that particular case the account will be classified as the loss asset. It will be classified as a loss asset. Okay. So that is a procedure that is to be followed related to the that when the account is irregular, and further then it is transferred to the non-performing assets. These all categories are related to the non-performing asset. When the loan account is under the SMA, loan account is having the SMA status. In the case the loan account is having the SMA status, it still be considered to be as a standard asset. It's still to be considered as a standard asset, and it will be subjected to the provisioning norms as per the standard assets only. Is that clear? So now let us have a look at the theory so as to understand it well. Okay. So it is related to special mention account. I already told you that three categories are there. That is related to financial reasons. That is SMA 0, SMA 1 and SMA 2. And further, SMA NF, it is related to non-financial signals of stress. It is related to non-financial signals of stress. Okay, so SMA 0 is ranging from 1 day to 30 days, and from SMA 1 to 31 day to 60 days, and SMA 2 from 61 days to 90 days. Okay, then further after that special mention category, let us have a look. Let us have a theory related to the NPA guidelines. First of all, it is related to term loans. Term loans. So if the interest or the installment or both remains overdue for a period more than 90 days, if our interest or installment or both remains overdue for a period of more than 90 days, in that particular case the loan will be classified as non-performing asset in the case of the term loan. In the case of CC, that is a cash credit or overdraft, if the account remains out of order for a period more than 90 days, if the account remains out of order for a period of 90 days, in that case it will be classified under the non-performing asset category. So here is a question asked related to when the account will become
SMA, NF, when the non-financial conditions were not fulfilled. Let us take the case when the stock statements were to be submitted under the CC account and further those were not submitted. In that case, it will turn out to under SMA, NF status. Okay, it will show the signs of irregularity, and after a 90-day period, it will be basically covered under the non-performing asset category. It will be covered under the non-performing asset category. Now let us have a look at the CC overdraft. It says if the account remains out of order for a period of more than 90 days, out of order for a period more than 90 days, in that case it will be classified as non-performing asset. Now when the account will be said to be out of order, for that particular case we need to understand one thing. First of all, it is related to the sanction limit and drawing power. So let us take the case, a CC limit has been sanctioned to a shopkeeper against stock of rupees 10 lakh. So the shopkeeper is having a stock of amounting rupees 10 lakh, and against this 10 lakh limit, the 5 lakh limit has been sanctioned. 5 lakh CC limit has been sanctioned, keeping margin of 50%. So 50% of the margin is to be maintained, and the shopkeeper is sanctioned 5 lakh of the CC limit. Okay, and let us take the case that the outstanding balance in the loan account is 4,55,000. It is 4,55,000. Now the branch had visited the shopkeeper and found that the average stock so maintained by the shopkeeper is 7 lakh and not rupees 10 lakh. So they reduced the drawing power so as to amount rupees 50% of the 7 lakh, that is 3.5 lakh. So previously the drawing power and the sanction limit both were 5 lakh rupees. Over here the drawing power and further the sanction limit were 5 lakh rupees, but now the amount of stock is 7 lakh rupees and appropriate margin of 50% is to be maintained, so as to they reduce the drawing power to 3.5 lakh rupees. What does it mean? It means that any particular time the maximum amount which can be drawn from the CC account, it is now limited to 3.5 lakh rupees. It is now limited to 3.5 lakh rupees. Now the balance over and above the drawing power, now this is the new drawing power. Now this is the new drawing power. Now any of the balances over and above this drawing power will be considered to be overdue amount. It will be considered to be overdue amount, which is amount of rupees 1.05 lakh rupees in this particular case. Okay, in that case it is said to be what? It is said to be the overdue amount. So you must be understanding the concept related to the drawing power and the sanction limit. Is that clear? So what is the relationship between the drawing power and sanction limit? So drawing power is either lesser than that of the sanction limit, or maximum it can be equal to the sanction limit, or maximum it can be equal to the sanction limit. Okay, so if your amount outstanding, if the amount outstanding in the CC limit, if the amount outstanding in the CC limit is greater than the drawing power, it is greater than the drawing power for the 90 days, in that particular case it will be classified to be non-performing asset. And also if there is no credit, if there is no credit for a period of 90 days, the CC limit will be classified as non-performing asset. And also if there is credit, if there is a credit but the amount so credited is not sufficient so as to capture the interest rate so charged, in that case also the account will be classified to non-performing asset. What does it indicate? Let us take the case that on a limit of rupees 5 lakh, each and every month interest of rupees 4,000 is being charged. Amount of rupees 4,000 is being charged, and further the person deposited rupees 3,000 in the first month, and further he basically deposited rupees 4,500 in the second month, and rupees 4,600 in the, or 4,400 in the third month, 4,400 rupees in the third month. Now in that particular case, kindly please confirm if the account will be classified as non-performing asset or not. Kindly please confirm if the account over here will be classified as a non-performing asset or not. So I already told you that the interest of rupees 4,000 is being charged each month, and the customer, the borrower deposited rupees 3,000 in the first month, 4,500 for the next month, and 4,400 for the third month. In that particular case, the account shall be classified to non-performing asset category or not. Because in the third category under the out of order criteria, I told you if the amount so credited is not sufficient so as to cover the interest rate so charged for that particular period, in that case also the account will be classified as the non-performing asset. So if you look at the total over here, the total amount which was to be deposited for the last 3 months, that must be equal to 12,000, because the 4,000 of the interest is being charged for each and every month. But in this case particularly, the amount so deposited is lesser than that of the interest rate charge, so it will be classified as a non-performing asset. It will be classified as a non-performing asset. And other than that, if the stock statements are not submitted in time, in that case also the CC limit will be classified to non-performing asset. It will be classified to non-performing asset. Is that clear? So when the stock statements are not submitted for the last 3 months or delayed by 3 months, in that case also the account is said to be out of order. It is said to be out of order. Is that clear? Next it is related to bills account. It says that when the bills are due, and further if the bills are due at the 1st of January and further they remained due for a period of 90 days ahead, in that case also the bills account will be termed as non-performing asset. It will be termed as non-performing asset. Next it is related to agriculture. So in case of agriculture, we are having two types of crops. One, it is a short duration crop. When it is related to crop season is up to 1 year. In those cases where the crop season is up to 1 year, it is said to be what? It is said to be short duration crop. And for the crop where the crop season is longer than 1 year, it is said to be long duration crop. So if the installment or interest in the case of the short duration crop is due for the 2 crop seasons, in that case it will be classified as non-performing asset. And in the case of the long duration crop, which is considered to be crop where the crop season is greater than 12 months, which is where it is longer than 12 months, in that particular case, if your interest or principal or both are due for one crop season, for overdue for one crop season, in that case it is considered to be non-performing asset in the case of agriculture. Further, it is related to consortium accounts. Now, what is the case related to consortium account? Let us take the case XYZ is a corporate over here, and further they require a loan of rupees 500 crore rupees. They require a loan amount rupees 500 crore, and further they went to bank A over here, but bank A hesitated that they cannot have that much exposure. So bank A, B, C, D, all these 4 banks sanctioned a loan of rupees 500 crore rupees to XYZ over here. A bank sanctioned a loan of rupees 200 crore, B, C, D sanctioned 100 crore rupees loan each to XYZ over here. Okay, now let us take the case that loan account of A, B, D are regular. These are standard, that the installments are being deposited by the XYZ under the accounts maintained with the A, B, D are deposited regularly. So these are regular accounts. But in the case of the C bank, there is a default in the account and the loan account turned out to be NPA. Now the asset classification in the case of the consortium account is based upon the record of the recovery with the individual bank. Okay, it will be depending upon the individual bank. So if there is basically a recovery made by bank ABD and their status is regular, it means their loan is standard. But if there is no recovery in the case of, or a partial recovery in the case of a bank C account, and further the loan account turns out to be NPA, the classification will be based upon the individual bank. Over here. Is that clear? And further it is related to credit card. So there is an amount mentioned in the credit card, that is a MAD, that is a minimum amount due. So if the minimum amount due in the statement of the credit card is not paid fully within 90 days, if the minimum amount due in the credit card statement is not paid fully within 90 days, in that case also the account will be classified to be non-performing asset. The credit card account will be classified as non-performing asset. Now let us have a look at related to the advances against the deposit and for the NSCs, the KVPs, the life insurance policies. So whensoever the amount is sanctioned against the liquid assets and further appropriate margin is to be maintained, these are basically maintained and classified as standard assets and should not be considered non-performing asset if the appropriate margin is maintained. But if proper margin is not maintained, in that particular case the account can be classified into non-performing asset. Then it is related to the loans guaranteed by the governments, where the loan is guaranteed by the state government, normal IRAC norms would be applicable. normal IRAC norms will be applicable, that is as per applicable on the other loan accounts. It would be as same applicable if the loan is guaranteed by the state government, but if the loan is guaranteed by the central government, in that case the IRAC norms will not be applicable. The account will remain under the standard category only, and no provision is to be created, only if the government cancels out the guarantee, only if the government cancels out or repudiate the guarantee. In that case, it will attract the normal IRAC norms, that is the income recognition and asset classification norms. Otherwise, if the loan is guaranteed by the central government, in that case no provision is to be created, and further the account will remain under the standard category only. Okay. Now let us have a look at related to this particular case. The standard assets are those assets which are in order, which are regular. Substandard assets are those assets which are non-performing assets, and further these will remain over there for a period of 12 months, and further after 12 months these will be classified under the doubtful assets, and further the accounts which became unrealizable, where losses have been identified by the bank, but further due to the internal and external auditors or RBI inspectors, it is basically meant to be in the banking books itself, and that case those will be classified as loss assets. Now I already told you that the provision is to be created whether it is a standard loan account or the non-performing asset, whether it is a standard asset or the non-performing asset. So let's consider it first of all related to the standard assets. When the asset is related to the direct agriculture or the SME advance, in that case the provision of 0.25% of the outstanding amount is to be maintained, and when it is related to all other loans and advances which is not specified, in that case 0.4% of the provision is to be created. And further, if the loan account is related to CRE category, that is commercial real estate category, in that particular case the provision of 1% is to be created. And further, if it is related to the CRERH, that is commercial real estate residential housing category, in that case 0.75% of the provision is to be created. Where it is a case of the teaser rate housing loan. What is a teaser rate housing loan? Where lesser interest rate would be chargeable in the earlier installments, and further later on period the higher interest rate would be charged. That is said to be what? That is said to be teaser loan. Okay. In case of teaser rate housing loans, 2% of the provision is to be created. 2% of the provision is to be created. There is a question related to that provisions to be maintained for in the case of the state government guaranteed loan. Yes, definitely. In the case of the state government guaranteed loan, provision is to be created, and normal IRAC norms would be applicable. Further, it is related to non-performing asset category. First of all, we will be learning related to the substandard asset category. Now, whensoever the provision is to be created related to the substandard asset category, first of all we need to understand what is secured advance and what is unsecured advance. What is secured advance and what is unsecured advance? So in the case of the loan so sanctioned, let us take the case that a loan amounting rupees 20 lakh rupees was sanctioned, and further the value of security so available at the time of sanction, if it was greater than 10%, in that case it is said to be secured loan. If the value of security is greater than 10%, it is said to be secured advance. And further, if the value of security is lesser than or equal to 10%, in that case it is said to be unsecured advance. In that case, it will be classified as unsecured advance. Is that clear? So if the security is available, the value of security is greater than 10% of the amount so sanctioned, in that case it is basically, if the value of security is greater than 10% of the amount sanctioned, in that case it will be secured advance, and if it is lesser than or equal to 10%, it will be unsecured advance. Okay. Now for the secured substandard loan account. 15% of the provision is to be maintained. 15% of the provision is to be maintained, and further for the unsecured substandard loan account. For the unsecured substandard loan account, 25% of the outstanding amount of balances provision is to be created. 25% of the provision is to be created. And further, if the loan account is related to the infrastructure loan, in that case 20% of 20% of the provision is to be created. In that case, 20% of the provision is to be created. Is that clear? And further, if the loan is classified under the doubtful category, and further we are having three categories under the doubtful category, that is D1, D2, D3. That is D1, D2, D3. So in the case of a doubtful category, we will be considering the realizable value of security. We will be considering the realizable value of security. Now, what does it mean related to the realizable value of security? Realizable value of security is related to, let us take the case at the time of sanction. At the time of the sanction, the loan was sanctioned amounting rupees 20 lakh rupees, and further the value of security which was available that was equal to the loan amount, that was 20 lakh rupees. But right now the realizable value of the security which was available, it is now 12 lakh rupees. It is now 12 lakh rupees, and further the outstanding balance is 15 lakh rupees. The outstanding balance is 15 lakh rupees. In this particular case, we are having the secured balances of 12 lakh rupees, because against this the security of 12 lakh rupees is available, and further there is a shortfall of security for amount of rupees 3 lakh rupees, that is the unsecured amount over here. So in this case particularly, we are having 12 lakh rupees for which the security is available, and further for 3 lakh rupees we do not have any kind of a security, for which security is not available, there is shortfall of security. In that particular case, it is said to be unsecured loan. It is said to be unsecured loan. So for the secured part under the D1, 25% of the provision is to be created, and further for the unsecured part under the doubtful category, whether it is related to D1, D2, D3, the provision is to be created 100% uniformly. The provision is to be created at 100% uniformly. Is that clear? Further, under the D2 category, where the loan will remain after the D1 category for the next 24 months, for the secured part, the provision is to be created at 40%, and for the unsecured part, that where the shortfall of the security is there, in that case it is 100%. And for the D3 category, it is 100% uniformly. It is 100% uniformly. Okay. And also for the loss asset, the provision is to be created at 100% uniformly. Is that clear? Is that clear? Now here is a question related to, question is asked that why provision is to be created. That why provision is to be created. Let us take the case that the banks are lending the money to the borrowers over here. Now the banks do not have their own money. The banks do not have their own funds. These funds belong to the depositors. These funds belongs to the depositors against which the loans are sanctioned. Against which the loans are sanctioned. Now, if the loans are turned out to be non-performing assets, there is a risk arising on the depositors' money. There is a risk arising on the depositor money. So as to maintain the solvency of the bank. So as to maintain the solvency of the bank, it is required under the IRAC and provision norms that a certain provision amount must be there. Certain provisioning must be maintained so as to maintain the solvency of the banks. So as to maintain the solvency of the banks. Okay. So that is why the provision is to be created. So that is why provision is to be created. Okay. Further, NPA on account of erosion in the value of security. Let us take the same case where a 20 lakh of loan amount was sanctioned. Where the 20 lakh loan amount was sanctioned against the value of security amounting rupees 20 lakh. So at the time of sanction, 20 lakh of the value of security was available, but now there is erosion of security. But now there is erosion of the security, and if realizable value of security is now lesser than 50%, let us take the case that the realizable value of the security which can be realized right now, it is 9 lakh rupees. That is lesser than 50% of the value of security which was available at the time of sanction. In that case, it will be directly transferred to the doubtful category. It will be directly transferred to the doubtful category. Doubtful 1 category it will be transferred to. And further, if the realizable value of the security is lesser than 10%, if it is lesser than 10%, let us take the case that the realizable value of the security is equal to 1 lakh rupees. In that case, it will be directly transferred to the loss asset category. It will be directly transferred to the loss asset category. Is that clear? Here a question is asked related to below 10%, it is loss asset. We are talking about related to erosion of the value of security. We are not talking about the value of security. We are talking about the erosion of the value of security. Let us take the same case where at the time of the sanction, the value of the security which was available against the 20 lakh loan amount, it is a loan amount, and further the value of security which was available, it is a 2 lakh rupees. It is 2 lakh rupees. So as per the secured unsecured loan, which will be saying which loan it will be. Which loan it will be? Would it be a secured loan or unsecured loan? Kindly please do answer at the earliest. Would it be a secured loan or unsecured loan? Kindly please do answer at the earliest. I told you that if at the time of the sanction, if the value of security is greater than 10%, if it is greater than 10%, it is a secured loan. And further, if it is lesser than or equal to 10%, if it is lesser than or equal to 10%, it is unsecured loan. So if it is greater than 10%, it is a secured loan, and if it is lesser than or equal to 10%, it is unsecured loan. So if the value of security at the time of sanction is a 10% of the amount so sanctioned, it is unsecured advance. It is unsecured advance. Okay. Now let us take the case that the value of the security, there is erosion. There is erosion in the value of the security, and the value of security is lesser than 50%. Is lesser than 50%. Then let us take the case that the new value of security is now equal to 95,000. Now it will be transferred to which category? Now it will be transferred to the doubtful category. Now it will be transferred to doubtful category. Are you understanding my point related to why it is a secured loan, unsecured loan? I'm not asking related to I'm not saying that if the value of security is equal to 10%, it is lesser than 10%, it will be transferred to loss asset category. I'm not talking about that. I'm saying if the value of security is lesser than equal to 10%, it is the unsecured advance. If it is greater than 10%, it is a secured advance. Okay. But if the erosion in the security of the value of the security is there, and further the eroded value of security is lesser than 50%, in that case it will be transferred to the doubtful category. And if the eroded value of security is less than 10%, then in that case it will be transferred to the loss asset category. Is that clear? Is that clear over here? Okay. Further, we have discussed already that state government guaranteed advances, the normal IRAC norms are applicable, and central government guaranteed advances, when government repudiates its guarantee, in that case only the IRAC normal norms will be applicable. Okay, and for the classification of the account is borrower wise. It is not account wise and it is borrower wise. What does it mean? Let us take the case that person A is maintaining different account with the bank: CC account, overdraft account, term loan account. Okay. Now these accounts are regular. The OD account is regular, the CC account is regular, but the installment is not being paid in term loan account. The installment is not being paid in term loan account. In that case, if it turns out to be NPA, then all these accounts will be classified as non-performing assets, because asset classification is borrower wise and not account wise. It is borrower wise and not account wise. Is that clear? Okay, let me explain the last one with an example. So loan amount we are considering to be 20 lakh rupees. We are considering it to be 20 lakh rupees. And further, we are having the value of security at the time of sanction to be rupees 2 lakh rupees. So it is an unsecured advance. Now let us take the case that the erosion of the security is there, and the new value of security, that is a realizable value of security. We will say the new value of security, not new value of security. We will saying it to be realizable value of security. It is now equal to, let us take the case, it is now equal to 15,000. It is equal to 15,000. Okay. Now in this particular case, the value of the security eroded to less than 10%. It eroded to less than 10%. What is 10% amount? The 10% of 2 lakh is equal to 20,000, but it eroded down to less than 10%. In that particular case, the account will be directly transferred to which category? It will be directly transferred to loss asset category. It will be directly transferred to the loss asset category. Is that clear? Okay. Now let us have a look at the questions based upon it. But before that, we will be covering related to the accelerated provisioning. So in case banks fail to report the SMA status to the accounts to CRILIC, so banks are to report the SMA status of the accounts to CRILIC. Now CRILIC is what? CRILIC is Central Repository of Information on Large Credits. It is Central Repository of Information on Large Credits. So RBI constituted CRILIC in 2014. It basically constituted the CRILIC in 2014 so as to collect, store and publish the data on the borrowers credit exposures. So the banks and financial institutions are to report the findings to the CRILIC, and further the borrowers where the aggregate balances of the fund based exposures and non fund based exposures related to over and all greater than or equal to 5 crore rupees, related to over rupees 5 crore rupees. In that case, the amount is to be, in that case, the status of the account, and further all the details related to borrowers must be reported to CRILIC, and banks should also be reporting the SMA status of the borrowers. Banks should also be reporting the SMA status of their borrowers to the CRILIC. Further, the CRILIC was constituted in 2014, and further the idea behind the CRILIC was the financial institution to notify the status of the stressed accounts and further submit the information to central database of the Reserve Bank of India. That was the purpose related to the CRILIC. Okay, and further, where the banks fail to report the SMA status of the accounts to the CRILIC, where the banks fail to report the SMA status of the accounts to the CRILIC or resort to methods with the intent to conceal the actual status so as to evergreen the account. Because I already told you that, let us take the case that if 1 crore of the loan account is there, 1 crore amounting loan account is there, and further it classifies to be as a substandard asset. It turns out to be a substandard asset. Now what is the loss to the bank? The bank is to maintain 15% of the provision. Even if this loan is a secured loan, the bank is to maintain 15% of the provision against this loan account. 15% of the provision means 15 lakh rupees must be deposited by the bank. The provision of amounting rupees 15 lakh must be created by the bank. Now it's a loss to the bank. Because bank will not be able so as to invest this money or further lend this money further. Is that clear? That is why if the banks do any of the things, whereas to hide the status of the account, and further conceal the actual status of the account or evergreen the account, in that case, the accelerated provisioning norms would be applicable on the bank. Now, what does it mean by accelerated provisioning? That extra amount of provision is to be maintained by the banks as a penalty. Extra provisioning amount is maintained by the banks over there, and further supervisory actions as deemed appropriate by the Reserve Bank of India shall also be taken by the RBI. Is that clear? That is related to the accelerated provisioning norms. Let us consider the table related to it. First of all, if the loan amount is a substandard and further the age of NPA is from up to 6 months. The age of NPA is up to 6 months. In that particular case, if it is a secured loan account, if it is a secured substandard account, in that case 15% of the provision is to be maintained and there will be no change related to it. But if the age of NPA is over 6 months and up to 1 year, in that case 15% of the provision is to be maintained for the secured substandard account. But in that case, under the accelerated provisioning, 25% of the provision is to be maintained. And for the unsecured substandard account, for age up to 6 months, for the infrastructure related loans, 20% of the provision is to be maintained, and for the other loans 25% of the provision is to be maintained. But under the accelerated provisioning, uniformly 25% of the provision is to be maintained. And further, where the loan account is unsecured substandard loan account and for the age of NP is over 6 months up to 1 year, in that case 40% of the provision is to be maintained under the accelerated provisioning norms. And further, if the loan account is related to doubtful category and for the loan account is related to doubtful one category, in that case 25% of the provision is to be maintained for the secured part and 100% for the unsecured part. But under the accelerated provisioning norms, 100% of the in the case 25% provisioning, you are to maintain 40% of the provision for the secured part and 100% for the unsecured part. And further, in the case of the doubtful 2 and doubtful 3, uniformly 100% of the provision is to be maintained where their accelerated provisioning norms are applicable. Then it is related to the PCR, that is the provision coverage ratio. PCR, that is provision coverage ratio. PCR is equal to what actually? PCR is the amount of provision that the banks are maintaining, amount of provision banks are maintaining, and divided by the gross NPA. That is basically related to the PCR. Okay, and PCR should be 70%. PCR should be 70%. If the PCR is being maintained in excess, in that case, excess of the PCR, excess of the provision can be basically taken into account, styled counter cyclical provisioning buffer. It can be taken as counter cyclical provisioning buffer and can be used for provisioning after the RBI or board approval. It can be used for provisioning after the RBI or board approval. Otherwise, if excess of provision is to be maintained, in that case, it is to be maintained as per the counter cyclical provisioning buffer. Is that clear? That is related to the PCR, and further it is related to the willful defaults. Further, it is related to willful loan defaulters. So under the chairmanship of the SS Kohli working group, the definition was given by the working group by SS Kohli. And further, what does definition identifies? That if the obligation is on there related to the payment and for the repayment of the loan is there on the borrower, but willfully they do not repay the loan back, even though they are having the capacity to honor the transaction, but still they do not pay the amount back, in that case it is said to be willful default. And also if the loan amount was sanctioned for some particular purpose, but the loan amounts sanctioned were basically those were diverted, there was diversion of funds. Let us take the case that the loan was sanctioned for the CC limit, but the loan was used for the purchase of some asset. Let us take the case that the loan amount was used for purchase of machinery. That is basically related to what? That is also related to diversion of funds. It may also be the case that the funds have been used so as to invest into the different markets under the different subsidiaries. In that case, it is also related to diversion and siphoning of funds, and that also amounts to the willful default. And it may also be the case where the assets so financed have been disposed of. Those have been disposed of without the consent of the bank. That will also amount to the willful default. Now there is cutoff limit related to the willful default, where the outstanding balances are 25 lakh rupees or above them. In that case, the penal measures would be applicable. And what are the penal measures? First of all, no additional facility will be sanctioned by any of the bank and financial institution for the next 5 years from the date of the name of the willful defaulter appears published under the list by the Reserve Bank of India willful defaulters. Under the RBI defaulter list, if the name is mentioned over there, in that case, no additional facility will be sanctioned by any of the bank and financial institution. That is the first penal measure. And second, it is related to that the lending institutions shall be formulating a policy with the approval of the board of directors, and further they can set a criteria by virtue of which they can take a decision so as to publish the photographs of the willful defaulters on their website, and further can publish the photos in their branches itself with the permission of the board of directors. But there should not be any discrimination. It should not be the case that you are not basically publishing the photos of your near ones and dear ones and you're publishing the photographs of the others. So there should be no discriminatory and no inconsistency. Is that clear? That is related to the theory part. Now let us have a look at the questions based upon it. First of all, it says the rate of provision on standard loans is given correctly in which of the following? The rate of provision on standard loans is given correctly in which of the following? So kindly please do answer at the earliest. Option 8 says agriculture loans 0.25%, MSc loans 0.25%, on other loans which are not specified 0.40%. Option D, all of the above. So I told you already that even in the case of the standard loans, the provision is to be created. And further, what would be the right answer over here? Kindly please do answer at the earliest. So the right answer over here is option D, that all of the above. We already know that in the case of the agriculture loans, it is 0.25%, and also in the case of the MSc loans, it is 0.25%, and in the case of all the other loans which are not specified, it is 0.4%. So option D over here is the right answer. So Ravi Nana Bala has answered correctly at the earliest. Second question, it says that the in case of unsecured substandard loans, to make the provision which of the following is not stated correctly, so rate of provision is 25%, rate of provision for infrastructure based accounts is 20%. To calculate the provision, the balance will be bifurcated into secured balance and unsecured balance, and option D, that one rate of provision will be used for the entire balance. So which of the following would be the right answer in the case of question number 2? So we are talking about the unsecured substandard assets. For the secured substandard asset, the provision is 15%. For the unsecured part, it is 20% for the infrastructure loans and 25% for the others. That makes option A and B correct. But for the option C over here, it says to calculate the provision, the balance is to be bifurcated into secure balance and unsecured balance. It is to be bifurcated into secured balance and unsecured balance, which is not correct. Because in the case of the substandard assets, the provision will be used for the provision rate will be used for the entire balances. It will be used for the entire balance. Let us take the case that the loan amount is 20 lakh rupees and the value of security available at the sanctioning time, it was 10 lakh rupees. Now the loan is what? Loan is a secured amount. Loan is a secured loan. And further, let us take the case that the outstanding balance is still 20 lakh rupees. Outstanding balance is still 20 lakh rupees and the account is classified to be as a non-performing asset, substandard asset. In that case, the provision would be applicable at 15% and it will be calculated on the full loan amount. It will be calculated on the whole loan amount, that is at 15% it will be calculated. So option C over here is incorrect. So option C will be our answer. Option C over here will be our answer. Is that clear? Over here? Question number 3 over here, it says that what is the rate of provision on secured substandard accounts? What is the rate of provision on secured substandard accounts? So kindly please do answer at the earliest. What will be the rate of provision which will be applicable on the secured substandard accounts? Would it be 0.4%, 15%, 20% or 25%? Which of the following would be the right answer? So question number 3, option B, that is 15% is the right answer. 15% is the right answer. So Ravi Nanabala has answered correctly at the earliest. So option B is the right answer in this particular case. Further, outstanding balance in substandard account is 20 lakh rupees. Outstanding balance in a substandard account is 20 lakh rupees. Value of security is 16 lakh rupees. What is the amount of provision? Rupees 3 lakh, 4 lakh, 5 lakh or 3.40 lakhs? What would be the right answer in this particular case? Kindly please do answer at the earliest. We are having outstanding balance equal to 20 lakh rupees. It is equal to 20 lakh rupees and further the value of security is 16 lakh rupees. So it will be secured asset. Why it is so? If the value of security is greater than 10%, in that case it is a secured loan. Now if it is secured loan, in that case it is said to be as classified as substandard asset. So what provision percentage would be applicable? 15% of the provision percentage will be applicable. So the provision that is to be maintained is rupees 3 lakh in this particular case. The provision is to be maintained at rupees 3 lakh. So what would be the right answer? Option A over here will be the right answer. So Rajiv Kumar has answered at the earliest related to question number 4 over here, that is 3 lakh rupees. That is 3 lakh rupees. So answer is option A over here. Answer is option A over here. Now let's move to the next question, which says outstanding balance in a substandard account is rupees 20 lakh. Value of security is 2 lakh rupees since date of sanction. What is the amount of provision? We need to calculate the amount of provision. The outstanding balance is given to be 20 lakh rupees. Value of security is 2 lakh from the date of sanction. What is the amount of provision in that particular case? Now first of all, we need to identify that if the loan is secured loan or unsecured loan. In this particular case, we are having the amount of value of security amounting up to rupees 2 lakh, of rupees 2 lakh, which is basically 10% of the outstanding amount. So it is what basically it is unsecured loan account. It is unsecured loan, and what would be the provision percentage applicable? 25% of the provision would be applicable, as it is not infrastructure loan mentioned. So option of C over here will be the right answer. So Kailash Komane has answered at the earliest that option C, that is 5 lakh rupees, is the right answer in this particular case. Option C over here is the right answer. Question number 6, it says the rate of provision on doubtful loans is stated correctly in which of the following cases? The rate of provision on doubtful loans is stated correctly in which of the following cases? DF1 of unsecured portion 100% and for the secured portion 20%. DF2 unsecured portion 100%, secured portion 40%. DF3 unsecured portion 100% and secured portion 75%. Which of the following would be the right answer in this particular case? Question number 6, which one would be the right answer? So under the DF1, the provision which is applicable, it is what? It is 25% for the secured part and 100% it is uniformly for the unsecured part, whether it is DF1, DF2, DF3. Okay, and for the DF2, for the secured part it is 40% and for the unsecured part it is again 100%, and under DF3 it is uniformly 100%, whether it is secured or unsecured, it is 100%. Okay, now as per the statements over here, option B is the right answer. Option B is the right answer in this particular case. So Cricket Live has answered correctly in this particular question. Cricket Live has answered correctly in this particular question. So option B is the right answer here. So option B is the right answer here. Is that clear? Next question says to calculate the secured balance in case of doubtful accounts. To calculate the secured balance in case of doubtful accounts, the following security is not to be taken. The following security is not to be taken. Whensoever we calculate the secured balance account in the case of the doubtful accounts, what of the security is not to be taken? Primary security, collateral security, guarantee from CGT, MSC, DICGC, ECGC or government, or option D, that is personal guarantee of third parties or the promoters. Which of the following is not to be considered? Which of the following is not to be considered? Question number 7. So which one of the following is the right answer? See, whensoever we calculate the secured balances, the primary security is to be taken, the collateral security is taken, and also if guarantee is available from CGT, MSC, DICGC, ECGC or by government, this is also to be taken. Option D, that is related to personal guarantee, is not basically taken. So if the personal guarantee is there by third party or by the promoters, it is not accountable. It is not accountable. So option D over here is the right answer. So Barani Vasuki has given the right answer over here. Barani Vasuki has given the right answer over here. So option D in this case is the right answer. Option D is the right answer in this particular case. So it is related to question number 8, which says a doubtful up to 1 year has a balance of 20 lakh rupees. The security value is 16 lakh rupees. What is the amount of provision that is to be created? So what will be the amount of provision that is to be created? So a doubtful up to 1 year is having an outstanding balance of rupees 20 lakh rupees and security amount is given over there. And what is the amount of provision that is to be created that we need to answer? So first of all, whenever we talk about the doubtful assets, we need to bifurcate the balances into the secured balances and the unsecured balances. So over here we are having the outstanding balance of 20 lakh rupees. We are having the outstanding balances of 20 lakh rupees, and further it is under the doubtful 1 category, and over here we are having the secured balances of 16 lakh rupees and unsecured balance, that is the shortfall in security, is equal to 20 lakh minus 16 lakh, that is the secured amount, will be equal to 4 lakh rupees over here. And we are well aware that in the case of the doubtful assets, we have to maintain provision at 25% for the secured assets. So it will be 25% of the 16 lakh rupees and 100% of the unsecured balances, that is 4 lakh rupees to be maintained over here and 4 lakh is to be maintained over here. So the total provision that is to be created, it is 8 lakh rupees in this particular case. It is 8 lakh rupees. So option C over here is the right answer, which is already marked over here. Option C is the right answer. But I already told you that what would be the methodology related to solving this particular question. What will be the methodology related to solving this particular question? Is that clear? So option C over here is the right answer. Option C over here is the right answer. Okay. Now let's move to the another question, that is the ninth one, which says a doubtful up to 1 year loan has balance of rupees 20 lakh rupees. The security includes primary security valued at rupees 8 lakh, collateral security value at rupees 8 lakh, third party guarantee net worth 12 lakh rupees. What is the amount of provision in this particular case? So in this particular case, we need to calculate the amount of provision. So what will be the amount of the provision that is to be created? So again, the outstanding balance is given to be 20 lakh rupees. The outstanding balance is at 20 lakh rupees. And further, the secured balance, the primary security is given to be amount to rupees 10 lakh rupees. And further, the collateral security is given to be of the same amount, that is 10 lakh rupees. And we are provided with the third party guarantee over here amounting rupees 12 lakh rupees. So the third party guarantee is given over there, which is having the net worth of 12 lakh rupees. So what would be the right answer over here in this particular case? So we have already discussed in the previous lecture related to that the third party guarantee is not considered, is not accountable for the security part, So we will be considering only the primary security and the collateral security over here. So as for the secured part, and that will be 20 lakh rupees. That will be 8 lakh rupees each. So it will be 16 lakh rupees. So the secured part over here comes out to be 16 lakh rupees. It comes out to be 16 lakh rupees, which is the secured part. And again, the unsecured part is 4 lakh rupees. That is the shortfall of the securities for 4 lakh rupees. And further, the loan is classified under DF1. So the provision to be created for the secured part is to be created at 25%, and for the unsecured part it is to be created at 100%. Okay, so 25% of 16 lakh it is equal to 4 lakh rupees, and for the 4 lakh 100% is equal to 4 lakh rupees. So option C over here is the right answer. So option C over here is the right answer. Is that clear? Because we calculated the secured part, and further we already know that third party guarantee is not accountable to be under the secured part. So that would be the solution related to it. So Priyanka Tejawat has answered correctly at the earliest. Priyanka Tejawat has answered correctly at the earliest. Next question, it says a doubtful above 1 year account shows a balance of 20 lakh rupees, value of security is 16 lakh rupees. What is the amount of provision in this particular case? A doubtful above 1 year, what does it mean? It means the account belongs to what category? It belongs to doubtful 2 category. It belongs to doubtful 2 category because it is above 1 year. It is above 1 year. Is that clear? Further over here, the outstanding balance is given to be 20 lakh rupees. Outstanding balance is given to be 20 lakh rupees. And then in that particular case, we are provided with the value of security to be 16 lakh rupees. So value of security is 16 lakh rupees in this particular case. So unsecured part would be of amounting rupees 4 lakh rupees. Now for 16 lakh rupees, the amount of guarantee, the amount of provision that is to be created at 40% because it belongs to DF2 category. So 40% of the provision is to be created, and for unsecured part 100% of the provision is to be created. So 40% of 16 lakh over here, it is 6.4 lakh, and further the 100% of 4 lakh is 4 lakh. So total provision is to be created at 10.40 lakhs. The total provision is to be created at 10.40 lakhs. So the right answer has been given by Rahul Singh Rajput over here. The right answer has been given by Rahul Singh Rajput over here at the earliest. Option C is the right answer in this particular case. Option C is the right answer. Is that clear? Now let's move to the another question, which says a doubtful above 3 years account shows a balance of 20 lakh rupees, value of security is 16 lakh rupees. What will be the amount of provision? Question number 11. We are provided with the loan which is under the category DF3, and further balance is 20 lakh rupees and the value of security is available at 16 lakh rupees. What will be the amount of provision in this particular case? So Bharani Vasuki has answered correctly And further, Rahul Singh Rajput has also answered correctly at the earliest. So option D over here is the right answer. Option D over here is the right answer in question number 11, because we know that uniformly in the case of the doubtful three assets, it is 100% provision is to be created. Whether it belongs to the secured part or unsecured part, 100% of the provision is to be created. So option D over here is the right answer. Option D over here is the right answer. Next question, it says a doubtful above 1 year up to 3 years account has a balance of 30 lakh rupees. The security includes primary security of 10 lakh rupees. CGTMSE guarantee cover of 80% is available. What is the amount of provision that is to be created? What is the amount of provision that is to be created? So we are provided with the doubtful 2 loan category, and further it is having a balance of 30 lakh rupees. So outstanding balance is a 30 lakh rupees, and further we are provided that a primary security is there amounting 10 lakh rupees. Okay, and we are already provided that a CGTMSE guarantee cover of 80% is available. So what amount of provision is to be created in this particular case? We have our first answer over here by Gohila Chandra, that is C, option C over here. Let us do check if it is right or wrong. Okay, so primary security is 10 lakh rupees. So unsecured amount for which the security is not available, it is 20 lakh rupees. It is 20 lakh rupees. And we are aware that a CGTMSE guarantee cover is available of 80%. So for 80% part will not be covered, against which the provision is to be maintained. Okay, so 80% of 20 lakh is basically amounting to 16 lakh rupees. For 16 lakh part over here, provision is not to be created, and further the unsecured part is now reduced to 4 lakh rupees. So 20 lakh minus 80%, it is equal to 4 lakh rupees. Now this is the unsecured part. For the unsecured part under the doubtful asset, 100% of the provision is to be created, and further for the secured part, that is 10 lakh rupees, 40% of the provision is to be created. 40% of the provision is to be created, isn't it? Isn't it so? So for the secured part, 40% of the provision is to be created, so it will be 4 lakh rupees. And further for the unsecured part, 100% of the provision is to be created, that is 4 lakh rupees. That is a 4 lakh rupees. Okay, so it will be equal to what? It will be equal to 8 lakh rupees. So the total provision that is to be created over here in this question, it is 8 lakh rupees. So what would be the right answer? Option B over here is the right answer. Option B over here is the right answer. So the right answer has been given by Ashish Mehta at the earliest. So Ashish Mehta has answered correctly at the earliest. So that is the right answer. Option B. Let me explain this to you again. First of all, I just told you that outstanding balance is 30 lakh rupees, and further the primary security is available for 10 lakh rupees. So the shortfall in security is for 20 lakh rupees, but we are aware that CGTMSE guarantee cover is available for 80%. For that the provision is not to be created. So that amount is to be subtracted, and we left with the unsecured portion of 4 lakh rupees, for which 100% of the provision is to be created. And for the secured portion of rupees 10 lakh, we have to create the provision at 40%, because the loan is categorized under DF2, okay, doubtful 2 category. So over here the total provision that is to be created is 8 lakh rupees. So option B over here is the right answer. Question number 12. Option B over here is the right answer in this particular case. Is that clear? Now let's move to the next question, which says a doubtful up to 1 year account has a balance of 40 lakh rupees. The security includes primary security of 10 lakh, collateral security of 10 lakh, ECGC guarantee cover of 60%. What is the amount of provision that is to be created? So we are well aware of the concepts now. So kindly please do answer at the earliest. So doubtful up to 1 year account has a balance of rupees 40 lakh. The security includes the primary security of 10 lakh rupees, collateral security of 10 lakh rupees, ECGC guarantee of 60% is available. So outstanding balance is of amounting 40 lakh rupees, and out of these 10 lakh of the primary security is available, and further 10 lakh of the collateral security is available. So the shortfall in the security is for 20 lakh rupees, and we are having the ECGC guarantee cover of 60%. So 60% of the part is basically that part for which provision is not to be created, and only for the 8 lakh rupees over here, only for 8 lakh rupees over here, we will be creating the provision at 100%, because it belongs to DF1 category. So 100% provision for the 100% provision for the unsecured part, and it will be equal to 8 lakh rupees. And further, for the secured part, we'll be creating the provision at 25%, which will be amounting to 20 lakh. 25%, it is equal to 5 lakh over here. So the total provision that is to be created, it is to be created at 13 lakh rupees. So answer over here is option B. Option B is the right answer. So Rahul Singh Rajput has answered correctly at the earliest related to this question. So option B is the right answer. Option B over here is the right answer in this particular case. Is that clear? Is that clear over here? Okay. Next, it is related to banks are required to maintain an overall provision coverage ratio of. So overall provision coverage ratio of what percentage is to be maintained by bank? So provision coverage ratio is equal to provision. It is basically ratio of provision to the gross NPA. To the gross NPA. Okay. So this is a provision amount that is to be created. This is a PCR, and what is the right answer? It is option C. So banks are required to maintain an overall PCR at 70%. And overall PCR at 70% is to be maintained. So option C over here is the right answer. Option C over here is the right answer. So that would be all related to particular this unit.
So I hope that you must have liked the content of the video. So if you have liked the content of the videos, do give it a thumbs up, and further do share the video among your friends and colleagues who have been preparing for CAIIB, and do not basically miss the course which is actually available. It's actually a pro course and you need not to go through anything else other than this particular course over there. So do hurry up, enroll in the course right now and start preparing for the same.